Hello everyone, so this video will be going through how to identify trend reversals and know that the market has properly bottomed out. So even during macro bullish conditions, we'll have protracted downtrend periods where price moves down for quite a bit of time. So we just want to be able to know when price has actually reached the bottom and the trend reversal is going to occur. So we don't want to long during this period, because even though there has been some bounces, what we see happens eventually is long positions will round trip as the price forms a new low. So the first thing to look out for is a higher time frame key level. Right, so that means going onto the monthly and weekly charts and marking out the key level. So on the monthly chart we have this fair value gap, 59,111, which also exists on the weekly chart, same fair value gap. And finally, going down to the daily time frame, we see that there are some equal lows here as well. So initially that would be our higher time frame key level, and it also has confluence of having equal lows. But what we saw actually happen was that the price reversed before reaching this key level. And the reason for that is because price was actually hovering above this key level for quite a bit. So much so that the sentiment of traders have shifted from bullish to bearish, and everyone was watching the same level, the same sweep of 59,000 to go long. So what happened was price reversed before reaching that level and left those traders behind. So how do we know when market has bottomed out? When it starts reversing before reaching the key level. So the key of that is S&T divergence. Okay, so that means where two correlated assets, one makes a lower low and another one makes a higher low. In this case, we have an S&T divergence between Bitcoin and Ethereum. So comparing these lows here, we have the low from 13th of April, which was swept and formed a lower low on 18th of April, in comparison to Ethereum, which formed a higher low instead. So that confirmed an SMT divergence. Right, so the next step after confirming an SMT divergence, or even if we're using the first method and the key low was reached, we want to see some confirmation, right? So how do we see some confirmation? We can look at market structure, order flow, and formations of order blocks, which would be a change in the state of delivery. Right, so when the SMT divergence formed, as we know, Bitcoin formed a lower low and swept the previous low. The down close candle, the red candle that swept this low, actually is an order block level. Right, an order block sweeps a low and price moves away from that level with quite a fair bit of momentum. And to validate the order block, we mark out the order block and watch for a reaction. Okay, so this is one of the best ways to identify the confirmation of a trend reversal. And further confirmation would just be market structure, right, where the market is making higher highs and higher lows. So you can see here, once price broke above 64,485, it formed a higher high. So this is indicative of a market structure shift. And also order flow is whether the price is respecting or ignoring bearish fair value gaps and order blocks. Right, so notice in this entire downtrend here, price was not able to close above any bearish fair value gaps. Right. However, down here on this candle close, you can see that price actually moved above this bearish fair value gap, and this indicated the start of bullish order flow, where in fact it's bullish fair value gaps and order blocks being respected. In summary, two ways to identify the bottom of the market. First way is high time frame key level in confluence with sell side liquidity. Second is front run of the key level by forming an SMT divergence. And then once we see either of these two, we seek confirmation through market structure, order flow, or a formation of a bullish order block that is validated with price going back to it and providing a positive reaction. Let's look at another example here on Solana. So you can see here price saw a very energetic move all the way up to 128 from the mid 70s, and then following that price saw a sort of extended period of drawdown and retracement. So we want to long once price has reached the bottom. So on this daily chart here, we have a very clear key level, which is the daily fair value gap, and there is also confluence with these equal lows right here. Alright, so we have this key level here, and pretty much we want to see an aggressive move down to the key level, enough to change sentiment to bearish, right? And then a strong buyback from this key level with confirmation of what we mentioned before. So we can see here, price moved down here, gave a strong initial reaction. So we move down to the low time frames and take note of what we're looking out for. Okay, so we have the bullish order block here being formed. Then we have a high here, which we can use for a market structure break. So once price broke above this high, and also this order block has been validated, this begins our sort of confirmation of a trend reversal, and we can enter into a long position. And pretty much as long as price maintains bullish order flow, you can expect the upside targets to be achieved, which are these sort of highs right here. And you can see the outcome is a very strong reaction from that higher time frame key level, and that being validated as the bottom of the market, where price reversed and then expanded significantly. So hopefully this video is helpful for helping you identify the bottoms of the market, and also just knowing what to look out for and being patient to wait for these key levels to be reached or for confirmation to be provided before entering into the market. Thanks for watching.